we're back on your trading account, Rodney, and you see you have $262 sitting over there, right? A little bit more than it was the last time, correct? You see that?
Yes.
Now, let's just go and quickly look at your history, right? That's something that you haven't seen your trades yet, right? Since we opened them, you didn't check that, correct? Okay, so let's click on that history, Rodney. Click on history at the bottom, right? And then obviously you're going to see here your trades.
We did.
That's something...
We did see this. We saw this last time. We've already seen.
Exactly. Now I also remember. You're right. You're right. Now I also remember. So we discussed how fast it took you for you to make that 10%, and we discussed that you may want to increase your capital for our session, so that you can go there to aim now to start making, let's say, $30 per trade, right? That's what we discussed last time, correct?
Right.
Wonderful. Great. So are you ready with that? Good to go. Correct?
I'm good to go.
Select anything on your choice, all right? You have oil, you have gold, you have NASDAQ, you have Australian dollar, US dollar, whatever on your choice. Select one of those, okay? Just on your choice. Any of those, okay? Pick on something, okay?
I'm just looking.
Oh, like this one. You see, it's a good one. You see, that's Euro versus GBP, but that's a daily chart. Now, so the first thing that I would like you to do, I would like you to look at the left top corner, and let's change 1D to 1H. You see, in the left top corner. Here we go. So 1D, you see, this is the time intervals that we discussed last time.
I remember. I gotta remember.
So every candle now represents 1 day, but we're gonna change that back again to 1 hour. So click on 1 hour, please. 1 hour. Here we go. Wonderful. Now you see your graph's gonna change now. So listen. Now you see the graph, and you see 1, 2, 3 big red candles going down. So the market now is in a downward trend. You see that? Downward trend. So it will be a good opportunity for you to sell it. But before you're going to sell it, okay, you need to know how much you will pay in your commission. And that's something that I would like you to pay attention now below. Where you see below sell and buy, this 0.01, right? Your trade size, 0.01, right?
0.01.
Between sell and buy, 0.01, correct? This is your trade size. Now, when you trade Forex, 0.01 represents $1,000. So you will be selling, by the way, $1,000. That's what it represents. However, in order for you to sell $1,000, you see below sell, it says margin required. Margin required. You see that? What is the margin required?
0.76.
Now, imagine you will need, in order for you to trade $1,000, you will need only 5.76 to take off your 260 because of that leverage. We discussed that before. Remember? Leverage. Okay? Yeah. You have buying power, leverage. Anyway. So this is how much you need to trade 0.01. And then in the middle between 0.01, you see it says spread. It says spread, and it says 2.40 points. And below that, it says 0.33 in dollars, 0.33 cents. Do you see that? Spread.
You'll see that.
Now, listen, if you look at the sell price and if you look at the buy price, the sell price is 85.68 and the buy price is 85.70. So the difference between them is about 2.40 points. That's what it's called. In other words, 2.4 pips. You all right? You're with me? The spread is the difference between buy and sell price. And that difference represents 32 cents right now. The value of that difference, 32 cents. It means that by the time you open a trade of $5.76, you will pay 32 cents in commission. Now, if you increase your trade size, instead of 0.01, increase that to 0.02. Okay, click on plus. Click on plus where you see 0.01. Now, you see the margin required. So now you're going to be trading with $11. So if you open your trade size of $11, commission will be 64 cents. Now, if you're going to increase your trade size like you did last time to $30, this is what you did last time when you traded $30 each. So increase your trade size to be required margin. Let's do that. $30, all right? Click on that plus, and let's make that $30. Okay, more. Okay, 28, 34. Okay, wonderful. You see? So now, if you're going to go to trade 0.06, just so you understand, you will be selling 1,000 euros. 1,000 euros. That's the trade size of 0.06 in volume. Okay. Now, in order for you to sell 6,000 euros, you will use only $34. So your trade will start with minus $1.93. You can do the same trade now. Click on the TPSL now at the top of your buy. Click on that TPSL above the buy button now, and then look at the take profit box below. Take profit. Okay, and change from the price to profit below the take profit box. Change from price to profit in your take profit box. And then on the right side, let's put again your 10% return, right? Which is going to be again your that 3.5 on the right side. Click on that black box, okay, on that right side, and then put 3.5, okay, and then click apply. That will be your 10% return. Click apply. And then you may want to click on that sell option because the market is going down. Click on sell. So you have to select that, sell, and then click on it again so that you can confirm your trade. So that the trade is going to go down. Click on sell and then click on OK. And then go to your positions right away. Go to your positions at the bottom. Here we go. So you see your trade started, as I told you, with that $1 and like 60 cents or 90 cents. What was that? $1.90. It started with that loss. And all you need now is just simply to wait until the market will cover that first. So when the market will bring that to zero, it means that the market now covered that fee for you. Understand? You with me?
I'm with you.
Okay. So is that clear now?
Yes, I do.
Okay, great.